I'm out here, y'all. I'm out here. Today, I am in San Diego. You're catching me at work. I'm at this work training in this nice resort back there. Just hanging out. Figured I would tap in with you all. Just kind of see what's been happening and give my um, perspective or what I think may happen tomorrow. So, tomorrow we have a lot of news coming. Well, not a lot of news. We've had a lot of news in the last week. I mean, these 2 weeks have had like a lot of economic data come out. I don't know if the jobs claim came out last week or something, but we had a lot of economic data come out. Today we had CPI come out, um, which CPI is still elevated. It's just not increasing super fast. CPI increased very fast last year, 21, 22, and and so we're not seeing like the huge like charts that look like this with CPI. Now it's like leveling out, but it's still because obviously when you look at a year over year comparison, CPI looks like it's slowing down. So when you see the headlines, they're going to say CPI is the slowest it's been in a year, but they're comparing what CPI is now to what CPI was last year around April, May, when, or April, May, when the numbers were pretty high. So CPI numbers came out, still elevated, but it technically shows a decrease, right? I mean, that's technically what it shows. Um, so, I mean, because it's hard to compete with how fast it rose last year. So that's pretty much that. So, um, I just had somebody in here. Who's in here? Drop a comment. Drop a comment if you're in there. I don't know if you're still there or not. So I got more interviews coming up and stuff, which I'm gonna dive more into this. But the Fed, Jerome Powell, the chair of the Federal Reserve, will be speaking tomorrow. They have FOMC today and tomorrow, and he is set to give a press conference. This press conference, the market is pricing in that the Fed will pause. I personally have been taking advantage of the trend that the market is in. The market has been just going bananas lately, and I've been participating in that trend, collecting profits, rolling options, things of that nature, which I'll talk to you all at some point about how I roll options and stuff. But I've been taking profits, in this time. I do suspect that we're going to have a downward move, a huge downward move later this year. Um, Obviously, when the Fed raises rates the fastest pace in history, it comes with a lag. So I'm not betting that we're in a new bull market because liquidity conditions have not changed. The Fed is still doing quantitative tightening. The Fed has been raising interest rates. Um, the Treasury account will have to be refilled, so they will have to sell bonds to which is sucking liquidity out of the financial system and to refill their accounts. So we're not in a easy money environment, where liquidity is flowing and pretty much that liquidity is able to escape into the markets and go to the markets and prop up equity prices to the extreme levels that we saw in 2020 and 2021. I do not think we're in that environment at all. So my view as far as the long term with the equities and the stocks remains the same. I do think that they're coming down and I'm still storing cash. So even when I'm playing the bear market rallies, I'm taking those profits, putting them into treasury bond ETFs or treasury bill ETFs, and what I'm doing is collecting 4% on that money. So that's how I've been playing it. However, tomorrow we will see what Jerome Powell comes out and says. If Jerome Powell comes out and says that the Fed is pausing, The market is going to rally extremely. It's going to extreme it to an extreme way. I I just know that if Jerome Powell, the way the market's been rallying already, if the market gets super positive news from the Fed that they are pausing on their interest rate hikes, then the market is going to rally. Now, whether that rally is sustained, for a long period of time, I don't think that's necessarily going to happen. I think we're still going to go lower because just because the Fed pauses does not mean that they won't hike again, right? Um, and they're definitely saying they're not going to cut rates. They're not going to cut rates because if they cut rates, that's going to lead to more easy money, which is going to make inflation worse. So they're not going to cut rates even if they pause. And charts usually show when the Fed pauses, they pause for months at a time, and then the market rolls over, and then they cut rates. So usually the Fed doesn't come to save the day and cut rates until something breaks. Um, so yeah, but if the Fed does pause, this market is going to rally even further. The market has been rallying already and has been, I would say, getting overbought. There's too much euphoria, there's too much optimism in the market. And pretty much right now is probably the time to be a contrarian because it flip flops. So, I mean, we had the lowest prices in equities back in October of last year. December, we saw a huge sell off too. December, we saw a lot of tax selling and things of that nature. So we saw the market take a big dive. I mean, um, a lot of these stocks were clobbered, especially in December. I remember Coinbase was down to $30, and then Coinbase skyrocketed back to 60, $70. I mean, 100%, from December, right? So, you know, back then the bears were too bearish. So every time the bears come out and be too bearish and everyone's being the bear, then those bears get squeezed and then the market rallies. What's going on, bro? Hey, yeah, so I've been taking some profits. I play some options mostly, so I've been playing options mostly on the SPY, the S&P ETF, because I knew it was going to rally. And so I made probably about a good 500 on it so far. I still have like a put in two calls because I know if the Fed pauses tomorrow, this market's going to rally. And so if the market rallies, I'm taking my profits. If the Fed comes out hawkish, then I'm hedged for that. And so like I'm hedged. So yeah, it definitely it can feel like gambling at times, but the biggest thing is like being hedged both ways. It's very helpful. Even if like the charts are telling you, or the charts and the fundamentals are saying like, hey, we're looking at a breakout, I still hedge the other way just in case, right? So I'll play a put as well. So, and then the biggest thing is patience and letting that play out. So, for example, my cousin, he sent me some option plays a while back on Tesla. I did not buy them. I was like, no, I'm not buying them. Blah blah blah. And those, I could have made a lot of money in a bear market if I would have bought them. Same thing for other. I mean, he sent me Nvidia back in October when Nvidia hit 100 and something dollars. He's like, hey, I buying an Nvidia call option for this date. He didn't hold it either. I didn't buy it. He didn't hold it. And so, but you saw Nvidia, the news with the AI, went from 100 or something to over $300. I don't know if it's at 400 now or something like that, but that would have been some massive profits. So the patience is very important when you have an options, like, because I notice like whenever I'm playing options and I look at the charts too much or I log on my account too much, like, and I see that I'm down, like the emotions kick in and you want to sell, like, oh, I'm cut my losses. But I've done that plenty of times And I know now because I've done it plenty of times. And what's happened almost not, I would say a lot of the times, it's like, say I have a conviction that the stock is going to go higher because of X, Y, and Z fundamental factors, and this is what the charts are saying. So, for example, I had a Tesla call. I would say what, uh, 4 months ago. I would say 4 months ago. I knew Tesla was going to go higher because Tesla, it's one of those highly volatile stocks. It goes violent one way and violent the other way, right? Um, I took profits, which I encourage people to do. Take profits on your options, but I sold a lot too early because I took $300 profit, and that same option turned into $4,000 over the next like 3 days. So, I mean, it's kind of hard. Like you want to be comfortable and have a rule that you take profits regardless. But sometimes, like the risk reward is just too great, or the reward is way better than the risk that you're taking. So, but yeah, so that's kind of just how I've played options. But um, so if the Fed does um, pause tomorrow, the market's rallying. Um, and then if the Fed decides to come out very hawkish, the market is going down because it's too optimistic right now. It's too euphoric, and many people are betting on it to go up. And so now it's time for the pendulum to swing the other way to the contrarians and the bears. Which that will likely happen in the next. If it doesn't happen tomorrow, I mean, if the Fed pauses, it's going to skyrocket. But if the Fed comes out hawkish, I think that the Bears are going to get their time to shine. So yeah, that's what I think for tomorrow. Yep, 300 to 4K, man. I was up on it, but I didn't hold it long enough. Do you own any stock you never sell and constantly buy? Um, Not necessarily. I mean, uranium stocks are running right now. I sold some of them off early, just to take some profits when it rallied before, but now they've went up a lot more. I think so. I'm in NXE, Next Gen, and Next Gen rallied from, it was at 360. Now it's at like close to 480, something like that. I mean, URNM, the Sprott Uranium Trust, that was at, I was buying that at $27. It's at like 30, close to $36 now. So I don't own any stocks and would never sell. I would say because the only stocks I would buy and never sell would probably be um, maybe tobacco companies. And I say that because tobacco companies have a huge market share, and there's no other new companies that can be created. So, and they pay like 7 to 8% dividends. So I wouldn't sell those. Um, I mean, there's times where just the price just gets too high. Like, I mean, oil, for example. I mean, I buy them. I buy, obviously, gold stocks, other commodities, uranium. But like when they start running, like it's just like you got to take profits, and you're gonna miss out on profits. That's one of the things I've been learning. You're not gonna time the tops or whatnot, but um, at some point you got to take profits. And if I take profits, I'll put them into like physical metals, or I'll put them into a savings account, getting about 5% or something like that. So um, I do constantly buy, but I just kind of just average in, here and there. I'll throw $10, $20 in this stock. I'll buy a share of this stock, buy a share of that stock. So because I just think that like there's a lot of risk. I mean, we still haven't had an announcement of recession or anything like that, which I know recession's coming. It comes every 8 to 12 years, and we have not had a full recession. That I mean, 2020 was technically a recession, but we pumped trillions of dollars to try to avoid that, right? So Um, I think these equities can go down a lot further. So I'm trying to be more cash heavy in this environment and earn a dividend or interest on my cash. So that's kind of like how I'm focused on it. But I am averaging into some stocks. So some stocks that I'm into, like Verizon. Verizon pays about 7% dividend, and they're owned by Warren Buffett for a while too. I don't know if he's. I gotta check and see if he still owns it. But Verizon. I mean, it went from 50 something bucks. Now it's at. I mean, I've bought it at $34. So pay over 7% dividend. So I've been buying Verizon, Walgreens. Walgreens is at $30, paying a 6% dividend. Have been nibbling on U.S. Bank. They're at $32. They were previously at 50, 58, $60, and so they're half off, and they are paying about 6% dividend. Um, I'm in MO, uh, which is Altria Tobacco Company. They pay about 8%, 7 to 8%. So, yeah, those are stocks that I constantly buy. But if they run, then I'll sell them and just take the profits and stuff, because I'm not finna miss out on the opportunity, and I think they'll get cheaper later on. Um, he said no, he doesn't own anymore. What about precious metals? Premiums are still crazy. You still buying? Yeah, I still buy. So I don't I buy off friends of mine who are on Facebook. So if you want to get connected with some of those groups, you get them a little cheaper than uh, than at like eBay or whatnot. And so I have traded a lot of my precious metals. I used to have a lot of collectibles. Like, for example, I had stuff like um, freaking Winnie the Pooh coin. And it's like, oh yeah, childhood favorite, or freaking, what else I've had? I got a Godfather silver ounce. I got a Scarface silver ounce. I sold a lot of collectibles. I sold the Al Capone and the Bonnie and Clyde collectibles. So I'm getting out of those collectibles as much because they you know they they cost a higher premium. Obviously you're paying a lot more for the art and stuff in the collectibles and the sentimental value versus like the actual silver content. And those are like the hardest to like get rid of, in my opinion, unless you have like a specific audience. Like my friends on Facebook, they have a lot of clientele for that. But at the same time, sometimes people aren't buying the product that they get in. So for me, I know for sure that I can sell constitutional silver. So I've been doing a lot more stacking of like pre 1964 and older, like John F. Kennedy's, dimes, quarters, things of that nature. I've been doing more of that, like the Roosevelt dimes. I have some 40% Kennedys, but not a whole lot. Um, so those are some of the ways that I'm stacking right now, and I'll buy like the 100 gram bars or like the 5 ounce, 10 ounce bars. So those are the things I'm buying with silver. Gold, I'm buying mostly. I mostly have pre-33s and I have some other collectible gold. I have some 1 grams and 2 grams and things like that. But um, I haven't been buying a whole lot because I'm trying to be more focused on cash. But when I have been buying, I'm buying stuff that's easier to sell than not. Um, Fucking free. I need to start buying precious metals. Yeah, I wouldn't say it's the best time. I mean, the premiums are high, but you can find deals. Like, um, I mean, send me your if you have a Facebook account or something, y'all can send that to me. I can add you to these groups. I can add you on my personal Facebook and add you to these groups with legitimate people that sell some of these metals, and you have people that are willing to sell for deals because, like, for me, I'm an eBay seller, so I have an eBay account, Smiley D09, SMILEY D09. Um, but eBay takes a lot of fees, like they're taking 7-8% off of my money. So, and then on top of that, if I promote the posting, then they take a huge cut. So sometimes, like, people online and on the Facebook groups want to make a good deal, and avoid all those fees. I mean, I just sold what, $750 worth of silver this week. So just from people online. So um, yeah, it's a good community. However, there are some snakes on there, and you got to be careful with people. Some people, because especially people you don't know, or people um, that are legit don't vouch for. So you got to be careful with that. Do you have a percentage of your income you solely have for investments? Um, Not necessarily right now, because I usually do 10%. I'll do 10% of the income into investments. Right now, I'm not doing that because I need to pay off some of my high interest debt. So, for example, um, when interest rates went up, the interest rates on credit card borrowing went up. So, I have a couple cards I'm paying off now that are, charging upwards of, 19, 20, 23%. And so it makes no sense for me to put that investment in a lot of my capital and investments when the banks are charging me that much. So so this is why I'm paying those off right now, which I've been doing good. Like, they've been getting, the balances are a lot lower than where they were. However, I still got some work to go. Um, but yeah, so that's the reason why I try to put more towards the debt than, like, my actual investments. I am putting a little something in there, but I don't have a specific amount. It just kind of depends on what comes in, because I have my main job, and then I have, like, a bunch of side hustles. I do consulting. I do uh, I do videography work, and a few other side hustles I have. So I do more. Um, Sometimes I get extra money in from that. Yeah. So yeah, the debt with the high interest. I would encourage you to check out. I mean, I don't know. You know your score and your everything, your credit, but Capital One has a really good card. Or no, not Capital One. Citibank has a really good card. Um, they let you roll over credit card balances to their card for 0% interest for 21 months. So I just actually just applied for this, and I was able to pay off like half of one of my credit cards that I was paying $100 a month, over $100 a month in interest. I was able to pay over half of that off, and so now I'm paying like 60 bucks a month, 50 to 60 bucks a month interest, and um, and then I'm able to pay off the other card at 0%. So I'm saving 60 bucks a month, uh, in interest, just by rolling it over to that card. So that's kind of a creative way that you can engage with that. So yeah, debt, and then also just what your money's going to. I mean, having a solid budget is very important. For me, that's been the biggest thing. Like, I started getting into these pay-in fours and stuff like that, buying stuff I don't need. Um, and so I had to get rid of all that stuff because I was sucking up my capital that was coming in when you're paying on this stuff, right? So um, being wise in that way is very important. Um, but yeah, y'all, I gotta get going. You said, let's see, I gotta chase Freedom Card, Freedom My Day to Debt. Interesting though. Thanks for that. I'll check into it. Yeah, checked it out. I gotta chase Freedom too. Um, it was good, like, for no interest for like what, I think 18 months or something like that. It was good, but you got to really be disciplined with these credit cards because they will try to get you. For me, I fell into that trap, and so that's what I'm working my way out of. But it's good to have assets so that you can pay those off and then have increasing wages and other side hustles that you can pay that off. I mean, my wages increased. I got about a 6,000 a year raise, $6,000 a year raise, which was good. Um, and then I have my side hustles of videography, consulting, and many other things. So I'm making money that way. So I'm able to pay it off, and then, you know, obviously, um, other ways as well. So, alrighty, y'all. Well, y'all take care. Have a blessed day. I'll tap in with y'all probably tomorrow or something. Let's talk after the Jerome Powell make his decision, and we'll see where my count is. All right. All right. Peace.